Hey guys, hi, this is Simon with ToughTrader.com. Going to do a trade review of the key levels that were posted onto the blog last night. And I wanted to show a before and after picture. This is a quick video, so I won't spend a lot of time going through absolute trade entry details. Give me just 1 second here. Let me get rid of all this. Did not expect that. So just before we get started, hold on 1 second. I need to pop this up. Is a pain backside, but there we go. Past performance is not indicative of future results. You can lose a substantial amount of money day trading futures, right? There's substantial risk to trading derivatives. You can lose all your capital. Have a plan. Know how to stop trading if you're losing money, right? Figure out if the process is if you can't paper trade, you can't real money trade. If you can paper trade, it doesn't mean that you can real money trade, but you absolutely cannot real money trade if you cannot paper trade. Number two, I'm sharing my trade plan with you in hopes that it makes you a better trader. Okay. However, I'm a real trader, right? I lose money sometimes. I make bad decisions sometimes. My goal is constantly striving to become better over an extended period of time, over and over and over and over and over again. It is not, right? It is not to pretend like I'm a guru. I'm the best trader in the world. The struggle is real. It's hard. You got to be at your best A game every day and bring your level of execution to a very high level. And if you're not there, don't trade, right? Day trading is the hardest way to make an easy buck on the face of the earth. So let's get started real quick. That's my 2 cents. I want to jump in and explain. How the levels are derived first for those of you who are newer in the room. So on the blog, you will see. I'm going to pull up the blog real quick. And on the blog, you will see that yesterday evening, I posted the levels, right? And then you'll see if I refresh this, that the levels have been posted afterwards. There's the before, there is the after picture. Before, after, right? And there and underneath, I gave a general outline of what the trade plan would be, right? So how are those levels derived? No secret, right? And the reason why is I used to think when I started, I was like, oh, I'm very good at doing the profile. I understand how to do the levels. That must be the secret to trading, right? Well, it turns out it's not. It's the secret to finding where you expect inflection levels, right? So the first thing that we did when we come into the day, when you look at the market, we pointed out, number one, it's not a bear market. Look at that. Higher highs, higher lows on the day time frame. That means longs are generally easier than shorts to start with. The number two thing that we pointed out is you'll see all those levels on the chart that are posted on the blog, right? All these little blue lines and gray lines through here, right? These are all levels that have been untested, major levels, volume levels, or time levels that were left untested above. They tend to create choppy conditions. Lastly, within here we said, so this is yet the blue area here. This is called the value area. That's where 75% of all the time on the TPO was spent yesterday. So this is a volume profile. This is a TPO profile, right? So when we're inside here, right, we expect choppy conditions, right? And what we looked at yesterday was because of the way the market traded, it's generally, right, I expected a faster market through here and even the possibility of trading all the way through here. Above this level, 29.1050, you'll see in the trade plan, I expected it to grind up, but the key word there was to be grindy and test each one of these little levels as we're moving up. This turned out, if you look at a 24-hour chart, this turned out to be the overnight high. This turned out to be the day session high, right? So lastly, in order to move lower, we had to establish below and hold below 29.0575. And that was key. It wasn't just getting below. It had to hold below. And then obviously, in order to really move down, you had to eventually break prior day's low, right? So how does that translate? That translates into zones that look like this. Okay, that's what the zones look like. Again, they were posted last night to the general public, right? So if you look at this relatively quickly at the review of the zones, right? We open up. So I want to show this very, very, very clearly. We open up. I'm going to spread this out and step you through the day so you can see how the trade location helps find your location, okay? We open up right here. This is the first 5-minute bar. There's a wick here. We test right down into this zone. This is a yellow zone. The key zones are the yellow zones. and the white zones. Those are the key areas, support and resistance areas. The purple lines are value area high, value area low. If they're dashed like below, they're untested prior value area highs and value area lows, right? And then the dashed white lines are naked points of control. If you're not familiar with profile, I suggest you read Mind Over Markets. Incredibly useful for figuring out where the market may have an inflection point. And so you can see we opened up, we tested yesterday's points of control. We closed above value area high from yesterday, consolidated, right? We consolidated through here. Then right after 9 o'clock, econ came out. We rolled down. And what did I say in the notes for today was that in between 29.10 and 29.05, I would be cautious. Why? Because it was very well auctioned yesterday, which means in general, right, that it would be easier to slip through this, because when an area is very well auctioned, there's very little reason to defend it more than the first time in. So remember, the first time in right here, I'm going to highlight this, put a little arrow underneath it. This right off the open, that right there is the first time in. We wicked right down to the point of control, closed above value, stayed there for the first half hour. Econ came out. People didn't like the econ for whatever reason. Doesn't matter to me. And they roll it down. Since this was the first time in and we test the top part, we pushed underneath. We rolled underneath. And again, I said underneath here would be difficult, right, to exactly gauge after the first time in. We roll down. We run out of gas. We roll right back up. We establish between value area high and yesterday's high, and then we go straight into chop. And I want to note something. This chop goes from 9:40 a.m., right, all the way to London close, which is at 10:30 a.m., and right into New York lunch. Why is that important? See, when the market rotates and counter rotates, just like this, really small, guys, this right here is called open auction. It means neither buyers nor sellers have an edge. Notice that we can't close above the first 5-minute high or below the first 5-minute low. That creates, right? That creates very difficult conditions, and I want to explain why really quickly. If you're trading, you're like, I've got the long, we're going to go to the high, right? Maybe you grabbed it here, and you're waiting patiently. It comes around and stops you. Let's say you've got the short here, right? You short in the morning, maybe you short right here, and you're like, I've got the short hooked up. It's going to roll down. It comes back and rolls right back up against you. Again, you'll notice when we established above the point of control to the right, the value area to the right, same choppy conditions, right? We were just basically bouncing off this primary resistance area and this primary support area, and we were just chopping in between, and it looks, right? Here's the hard part if you're a trader, right? It looks so easy to trade. You're like, but of course it was short and was going to roll back down. But then you look over here and you go, but of course it's long. Look, we're consolidating. We should come up and test the high, right? And look at this. Here, I'm going to draw this out. Look at this trend line that we established here. You're like, oh, it's going to forming a wedge, right? We're at the top. We're going to break to the upside, right? It looked like it was on the verge. And look how it gets narrower and narrower. It's mind-bogglingly difficult to trade this. You just want to sit there with your hands in your pocket, if at all possible. And you'll notice what they did, which was really wicked, is they came up. See how this was the high, first hour high right there? See how we came right back up at 9:50, and we tap it by a tick, and then we tap it right over here by another tick, right? So if you were short, right, and you go, well, I'm just going to put my stop 1-2 ticks behind the high, they take you out. President Trump tweets his tweet or whatever it is that he said, right? Market immediately sweeps all the way through the range. Notice where you get the response, right at value area low. They attempt to hold value area low. Now they backside test the key support area. This is first time from underneath at 29.08. Rejects 29.08. We attempt now, see this right here? This is an attempt to hold below value area low. Traders, right, people who are bearish are like, we're now below value area low. We can roll to the downside. But they forgot one key element in there. You got to break Thursday's low in order to make it lower. And then the second element in here, we've now rotated from 29.13 down to 29.02. ES operates off of 10-point rotations. There's no energy into this push, right? And then you'll notice this is the first attempted trap back into value area low. This is the second trap back into value area low, which, by the way, I want to shout out to Randy, who nailed off of reading order flow, which is what I coach primarily outside of using the zones to trade. And he had such a great observation that I think it is worth noting. And I want to bring this up from the room here really quick. Randy wrote, you can see these guys just nailed it. I was actually out of the room during this time. Okay. And he's wrote, I've just seen it a lot of times, right? So Randy wrote, yes, long 4.5. I was also working 3.5 bids. So I wanted long 04, stop 02, right? So you see that right there? Long 04, stop 02. And you see he printed that at 1:06 p.m. So look how awesome a job it is that he did here in entering this. Okay, and this is exactly what I teach. This is 1:04 p.m. when he posted this. Right here. Okay, so he obviously was doing his work over here. He posted about it over here. He's trying to get along 03 and 04 in this area right off the low because he read the process from a order flow perspective, right? And I'm going to show that in just a second, but I'm going to cover it in more detail in a more detailed coaching session later today. You'll then notice we get back into resistance, this yellow zone. Chop, 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 right? Finally, we come back up. We establish above. We get to value area high from yesterday. Notice this, when you're coming off of each little level like this, if you ever hear traders say locals are in charge, the reason why is the computers and the locals, we're trading every little stupid level is what we're doing here, right? That's why it's so choppy and not making any. This is the only time we got a straight definitive move, and it was based off of news from President Trump. Everything else, locals are in charge. So chop, 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 chop. Where do we come back to? All the way back around, and we sweep the range once again. Just this is sweeping the range fast. This is sweeping the range slow. And that's why I said I would not get very definitive on trying to establish anywhere between, right? Anywhere between 29.10 and 29.05. That brings us back to my comment, which if you'll look on the blog, I had written, I would not get, I'd be cautious with getting trapped on either side through this area because this area looked like it could be swept through relatively easily. And Randy did a great job. He and other members in the room executed perfectly, and they are long right here, and they get a beautiful rotation from 29.04 all the way back up to 29.12. So congratulations to those guys. So that's how the levels work from a perspective here, is that this gives us a quick overview of looking at the levels and knowing exactly what we're going to have an idea of where we're going to rotate and counter rotate, particularly the first time into those levels, right? So that's how the day unfolded. We were looking above to grind to the upside as long as we were holding here. Below here, if we could hold below 29.0575, it set us up for the chance for a roll to the downside. Unfortunately, that came after you got a 10-point rotation. The market got exhausted. We trapped back in, and as soon as we trapped back in for a second time, rolled right back up to value area high. And then all this is right here is you're squeezing the shorts. And so this is the trade that a lot of retail traders look for, and it's dangerous when you're shorting the afternoon. This area right here became the 50-60 retrace. See how we consolidated here? People are shorting, figuring we're going to roll back to the downside, and they trap themselves. And this is all these guys covering their short on a thin day. And that's my 2 cents. So long story short, right? What I suggest for you to become a better trader, number one, have a written trade plan, right? Every day, know exactly what your process is. The reason Randy was able to pull this trade off, here, I'll show you the setup. It came right off of order flow, right here into the low. We push into the low, biggest delta right on the low. This pattern is a very, very good pattern. We close with this delta above. If you look, this is my delta momentum indicator, right? And if you look on this push to a new low, you can see we have clear divergence into the low on new lows. And then even if you couldn't figure all that out, on this push, we push with the biggest delta of this whole rotation down right here. And as soon as we close back above that delta, whether you took it here or here, doesn't matter. Look at the push to the upside. This literally, this little moment in space and time, right? tells us exactly what we needed to know to figure out that we were going to probably squeeze the daylights out of these guys all the way back up and to the other end of the range. So this is very advanced day trading, right? Order flow is much harder to read. It takes practice and it takes seat time to understand what you're looking at. This part right here, okay, this right here, this can be learned, okay? The profile part, this can be learned pretty easily. Jim Dalton writes a book called Mind Over Market. It's not a very exciting read, but the information is fantastic. This is volume profile. This is TPO. Dalton really works purely on TPO. I work off of both volume profile and TPO profile. I highly suggest if you're a struggling trader and you don't understand how the auction process works, take a minute or take a week, take a month, learn that book and learn how profile works, okay? Because it makes your life much easier. You know when you're above a prior day's value, just like we were for the last couple of days, value has been shifting higher. Buyers are overall in control. Dips become easier to buy. When you're underneath value, rallies become easier to sell until we get up and above. And just knowing those few pieces makes it much, much easier to figure out which way you're going to lean and which way you're likely to get stretches. So while we are having value shift higher, we're in the very top third of the market. We're in a bull market. It's as bull as it gets, right? Buying the dip on key setups, right, makes it very viable to get 10 and 12 point rotations back up and to get paid like a king. So congratulations to my guys. I'm really proud of y'all. Y'all did a great job. I was out at lunch while that occurred. So Randy did a great job of pointing out this trade setup to members in the room. And I think, I'm not sure how many guys got paid, but I know a bunch of them got paid, and that's really, really cool. So have a great day. I'm going to have a great weekend. I'll post a more in-depth trade review either later tonight or tomorrow. If you would like to join us in the room, send an email to tradertough@gmail.com, and I'll extend you a 5-day pass, no strings attached. Have a great weekend, guys. Trade smart.